We are so glad you could join us here on a Monday as we watch your ag commodity trade. Interesting open here to start out our trading week. And of course, this week is going to include the supply and demand numbers that come out on Thursday from USDA. Well, we did have an overnight export sale to talk about in case you missed it earlier in the broadcast. This would be the third one, I believe, in the last week. And it was soybeans again, and it was 104,000 tons of soybeans. They were sold to unknown destinations. So 2 out of the 3 sales, I believe, would be to the unknown category. There was one sale of about 131,000 tons, I believe, on Friday that went to China specifically. But anyway, we'll add that to the mix, and we'll see how the market is doing. Let's take a look at our corn market right now and see how the trade is holding up. And with our quotes provided by bar chart, we're actually softening up here this morning. We're showing December at 5.52 1/4. That would be down 4 1/4 cents so far this morning. Now on the soybeans, they've been chopping around. They've been on either side of unchanged. I looked just a little bit ago, they were several cents higher, and now you have November turning 3/4 cent lower, and now back to unchanged. So it's totally lost. It's at 13.36 3/4. We're about 8, almost 9 cents off of our earlier low, and we're about a dime away from our earlier high from last night. So there it is, stuck in the middle. Now let's take a look at the wheat market. And in Chicago, you currently have September now trading 4.5 cents lower. It's quoted at 7.14 in December, down 4.5 cents as well. In the Kansas City wheat market, it started out higher on the day, and now it's sagging. We have December down a penny at 7.16 per bushel. About that Minneapolis wheat, it had decent gains in the beginning of the session. Well, right now, the December 2.5 higher at 9.05 3/4. So it's also stuck in the middle of its trading range today. I want to welcome aboard our in-studio guest, Mr. Chris Swift of Swift Trading in Nashville. Welcome aboard.
Good morning.
Thank you for coming in again.
Yeah.
The market started out with a bit of a flurry of activity there. The soybeans looked pretty good there for about 20, 30 minutes. And then it's like they ran out of gas, and that, not to lead to a pun about the crash in the crude oil market, but what is going on here with the grains? They just cannot seem to build any momentum and keep it these days.
I think we had a twofold story. So I listened to Dewey a little bit this morning when he was on talking about the weather and some of the issues and that triangular formation. So that triangular formation is unknown. We just really aren't sure and don't have enough information to push it out of it higher or lower. But when we look at what's coming up this week with the WASDE reports, I have a feeling what you're going to end up seeing is a little bit less grain out there. USDA maybe take the yields down just a little bit, enough to maybe take the edge off and start pushing them back a little bit higher. Pushing grain prices higher.
And now there we're looking at December new crop corn, and you're right, it is showing that kind of a long wedge formation there. And we were talking about that on the soybeans too, where it looked like it blew it out earlier on a very short-term wedge formation, but now it looks like it's making a longer-term wedge. It's still stuck within that. So if you look at it from a broader perspective, it has not broken out of it yet.
No, and the beans did. The tighter range it broke to the downside. We saw last week where we had that one day where we were down pretty good, but of course corn didn't follow. And then beans have tried their best to at least hold that low so far. So I redrew a second trend line up underneath there and see if it holds it for a little while.
Right. And it actually did lose, I believe, like $1.10 from its earlier high.
That's right.
When it did break out to the downside here about a week or so ago. So interesting market action there. The WASDE report, it's August. A lot of times you don't look for a whole lot in the August report, but maybe this year, what do you think?
Yeah, I don't really think that they'll do too much. Again, I think from this point forward, they'll wait for some harvest data. And we know that 2/3 of the entire crop's in excellent condition. It's had the timely rains, it's had the planted acres. The units per acre seem to be huge in the north there. So I think when we look at all the areas that are in good shape, we're going to continue to see those. I think it's that northwest quadrant where we still got some severe drought areas, and we note that there's a lot of beans grown in the western portions of the Dakotas, just past the central area there, more so than corn.
And I did want to take a look at something here. We touched on it a moment ago, the crude oil trade. Let's take a look at this. September futures, West Texas Intermediate crude down $2.55. We're at $65.73 per barrel as we speak. That's $2 and what is that, 17 cents off of its earlier high from overnight. So we'll talk about that. Chris, we're going to take a break right here. We'll talk about this and then possible spillover impact on some of the livestock trade and the equity markets, that sort of thing. All right, we'll have it all when we come back. Right before the break, I was talking with Chris Swift about our crude oil trade and showing that it was down about $2.50 on the day. In fact, it's down $2.57 right now. Chris, you were mentioning during the commercial break there that you were also watching what's going on in the gold market. What's going on here anyway?
Well, I really wish I knew, Marlin, but it did take me by surprise. Down to $20 wasn't that much to catch my attention, but if we look at the low of the day, down another $40, $50 from where we are right now, that made it down almost $100 on the day at one point. So that's a pretty steep move that we've seen in the gold market here recently.
Let's take a look at our livestock trade. We'll go to live cattle first, and a little lower. Not a lot, but some. October down 30 cents. We're at 127.57. And, you know, Chris, I was talking about it earlier in the broadcast. The deferreds on Friday closed sharply higher. They were outpacing the nearby contracts, which was a little bit odd if you have a bullish day. But now today, you're seeing more pressure on the deferreds. What does that tell you? Is it just spread realigning or what?
I think it's just a turnaround from Friday. So we saw where the cash market now, August is deliverable, and so we're not going to probably see too awful much movement in that. So the real trading now moves numbers of contracts out of the August and into the back months. So we've seen a fairly good significant decline in open interest, and especially in that August contract, and haven't seen any of the other contract months pick up the same extent as what the August has lost.
However, let's look at feeders, see what they are doing this morning here on a Monday. Now, they have turned mixed, and you have September 20 cents higher at 163.52. October up just a dime. They're not up much, but they are higher, while the live cattle are a little lower. And, you know, we've been talking about that. Feeders just seem to be a little more perky here lately than the live cattle. How come?
Well, I think there's fewer of them out there. I think when we saw the cattle inventory report last month that there are a fewer number of animals to work with. And we've already seen a lot of cattle move out of the West because of the drought. So I think the combination of just fewer numbers out there to begin with, and there is a seeming demand from cattlemen out there that cattle feeder is either tapped into a new revenue source or is able to somehow or another begin showing profits from the increase of input costs for the feeder cattle and corn prices.
And on the lean hogs, let's take a look at them. A lot of pressure here. October down 247 at 85.12. How much trouble are they in?
You know, they're breaking back down again, and the index was lower again this morning. So I think when you look at world hog production, you are growing still in China and going to try to keep those hog numbers up there for quite a while. We know that China's government has been buying pork to try to keep the price elevated. So I think we've got a lot of pork around the world right now.
Interesting. Well, Chris, thanks for coming in.
Absolutely. Always a pleasure, Marlin.
Happy Monday.
Thank
Appreciate it. Chris Swift of Swift Trading. Janet, back to you.